Well, for more on how China is tackling financial risks, we spoke to David Dollar. He's a senior foreign policy fellow at the Brookings Institute's China Center. And I started by asking him about the most pressing financial risk facing China.
I think the most pressing risk is the explosive growth of shadow banking over the recent period. China's banks are pretty well supervised, but a lot of financing now is outside of the formal banking system, and it's opaque. We know it's of a very large volume, but we don't necessarily know all the details. So it's good that Chinese authorities in the last few weeks have talked a lot about cracking down on shadow banking and reining in leverage in general. So it seems that the authorities are serious about bringing this problem under control.
And what sort of actions have we seen China take on this?
Chinese banks have been doing a lot of business on the side, what we call off balance sheet, and essentially intermediating between households and riskier borrowers. And the recent decisions from the central bank and the banking regulator was that banks are going to be held responsible for all these off-banking sheet activities. They're going to have to hold capital to take account of possible losses. It's going to be a factor in looking at their liquidity situation. And so all of a sudden, banks are being more cautious about the use of these instruments.
Now, we're also seeing some concern about China's level of leverage and also its rising debt. How concerned should we be at this point?
Well, it's the shadow banking that's really contributed to that big run-up in leverage. So it is something to be worried about. Overall leverage in the Chinese economy is getting up now to something like 260% of GDP. That's similar to what we see in developed economies like Japan, so I wouldn't be too alarmed. I think China has some special features that will enable it to deal with this, but we don't want to see it keep going up. I think that's what the authorities are doing now, is they're trying to stabilize it. They don't want to see the leverage keep rising, and they're taking some prudent measures to address it.
And are there any global headwinds that are really contributing to this growth?
No, I think the global economy is accelerating modestly. That's a healthy thing. The IMF has lifted its forecast of global growth. This is the first time in a long time the IMF is raising its forecast. So I think we've got a pretty decent growth for the global economy, and China contributed to that in the first quarter. So that puts some nice tailwinds behind China. It makes it a good time for them to be reining in leverage and trying to deal with some of these risks in the banking system. Their measures will probably slow down the growth of credit to some extent, cool off the Chinese economy a little bit, but I think that's a healthy thing because 6.9% in the first quarter, that growth rate is a little too high. It's not really sustainable.
So do you expect any changes in the direction of policy then when it comes to China's central bank?
No, I mean, you can characterize their policy as stop and go. This isn't the first time they've taken some measures to rein in leverage. So I look back over the last couple of years, they'll take some steps to rein in the growth of credit, but then they worry that real growth is slowing too much, and they worry about job creation. Then they hit the accelerator again, and growth picks up, but they worry about that rise in leverage. So we've seen this stop and go pattern for a while. Now we're in the stop part of the cycle.
And how is all this affecting life for everyday Chinese and the businesses there?
It doesn't have that much direct effect. Chinese stock market has come down about 4% in the last few weeks. That's not really a big deal, and most ordinary Chinese do not have a lot of wealth in the stock market. I think in terms of credit availability, it's gotten a little bit tighter, but their interbank interest rate is around 4.5%. Companies are borrowing at a couple percentage points higher than that. So I think there's still plenty of credit in this system. If things are a little bit tighter, that's the reality of China these days. That's not really a problem.
And just quickly, if we could take a look at China's insurance regulators, what are we seeing in terms of their efforts to really curb risk in that sector?
Well, a couple of years ago, they started allowing insurance companies to invest some of their vast assets overseas. And a little bit of that is probably smart diversification, but too much of that is risky. So I think recently the insurance regulator has stepped in to stop some overseas deals from the insurance companies, deals that were far outside the area of expertise of these insurance companies. So they are taking some measures there. They've done a little bit to open up the market more to foreign companies. There are a lot of big international insurance companies that would like to get into China and that could bring some expertise and stability to the market. But the moves are modest at this point.